Hey traders, the Chart Guys Swing Report newsletter is currently live. In the description of this video, there are two links. The first is to the sign up page where you can also get emailed an example of a previous copy. And the second is to an in-depth video to let you know exactly what the Swing Report entails. Appreciate your attention. Let's get on to the charts. Good afternoon, trading friends. Yes, I'm wearing the same shirt as yesterday. It's just my video shirt for now because summer trading means birthday suit trading. So we're going to look at the broader market here. I'm going to go over some trades that I made today. It was my best trading day in a few months, maybe 6 weeks or so. So I'll go over what went well and, most importantly, keeping the losers small and keeping the winners sizable. And that was Tesla and NKLA. So looking at the S&P 500, daily consolidation is underway. Let's start with SPY. So SPY pulling back. Is this a fake out? Fake out, breakout? Not ready to call it that yet. What I need to see is a loss of the daily uptrend because we're just anticipating a daily high or low. Anything above 298.93, 5% away, is a daily high or low. So what I need to see is a daily high or low, failure to break the high, confirm a daily downtrend, then I'll start talking about a fake out. The size of the consolidation that we see from here is going to be very telling. If we pull back this much, it's going to be very different than if we pull back this much. So I gain a lot of information based on size of consolidation on whatever time frame that I'm looking at. And just as a visual guide to keep it simple here, I will say that if SPY holds the daily 12-period exponential support, this red line, continuation will be favored. If we lose that level, then an equilibrium and tightening range will be favored. And of course, if we're going to drop to a lower low, we're going to have to see massive bear volume and all of our sectors dumping in unison. So size of the consolidation is going to help us determine what is the most likely scenario from here. S&P 500 futures chart confirmed a 4-hour downtrend at the end of the day. So low of the pullback, high of this bounce, lower low. 4-hour downtrend, daily consolidation underway. And the bears were impressive at the end of the day with their amount of volume. And what was most impressive is the fact that the bulls could not bounce while still in an hourly uptrend. For SPY and for QQQ, anything above this level, and QQQ was still in an hourly uptrend at that point, is an hourly high or low. And to not be able to get any kind of 5-minute bounce follow through while in an hourly uptrend is notable. If we're in an hourly downtrend, it makes sense. Bulls struggling on a 5-minute bounce attempt. But this was a bit different. So bears have momentum in their favor for now, and we're watching daily higher lows. So if you're looking short term, you are looking bearish. But if you are looking for daily higher lows, you're establishing your game plan. What are the signals that you're going to be looking for a SPY daily higher low? Are you going to be looking for Amazon's first hourly oversold conditions? Are you going to be watching QQQ for a daily higher low? These are all things that we pre-plan as traders and then execute on them when the trades come to us and the setups that we want come to us. So IWM, rejected from resistance. It is still a 2-day tightening time frame. High, low, lower, high, higher, low. We rejected from resistance by $1. And now we're looking down at support. 136.29 is the most important level. And we're still 3% plus above that level. And this can be a clue. Because if we're going to see weakness, IWM has to break this pattern bearish. If we form a higher low and stay in the tightening range, we know the S&P 500 is likely going to form a healthy daily higher low as well. And we won't see any major red flags. So we can be using this as a bit of a clue. While S&P 500 is not in the 2-day time frame that I would have liked to see hold for some suspense and some entertainment, we still have that for IWM. So we can use this as a bit of a clue. QQQ. So bearish reversal on the daily. Have to break the low today, tomorrow for daily consolidation to be underway. Tons of space. We got 7% of space to work with to maintain the daily uptrend. So we are looking for a daily higher low compared to 237.35. We'll be watching for first hourly oversold conditions for the potential to be looking for that daily higher low. So if I want to be an aggressive bull, which I'm not sure I want to be because again, this weekly time frame is very extended. But if I wanted to be, I would be watching for first hourly oversold conditions, and if I want to make a longer term swing entry on that, I scale in maybe 2 positions into hourly oversold conditions. First hourly oversold bounce, I sell half of my position, and I put my stop under the low at that point. And if that's the low, I nailed it. And if it's not, I get stopped out break even with no risk, and then I can reassess the situation and then still look for a daily high or low after that. So that's one way to approach looking for a daily high or low. Let's look at the last time we consolidated. So last time we set a daily high or low, look at our hourly oversold conditions on QQQ. And it wasn't the first hourly oversold. We did bounce from there, solid bounce, but would have stopped out, got oversold again, and then the bounce followed through. Always look at history for clues as to what trade setups would have worked out. But again, bigger picture, we are looking for a daily high or low on QQQ. Size of the pullback is going to be informative. We can do the same thing as SPY, watching the 12-period exponential support to see if continuation is favored or if the pullback is going to be more significant, to then be looking for a tightening range. What happened to all my sectors? XLV. So XLV daily consolidation already underway. Tons of space. Again, 5% plus. Anything above 96.84 is a daily high or low. And we're watching for that high or low. Hourly, keeping an eye out for oversold conditions. Confirm the hourly downtrend right at the end of the day. Let's see how much follow through the bears can get. Bears need a solid red day tomorrow with all three of our major sectors showing red if we're going to be looking at follow through. We know the financial sector has been the weakest of our major sectors. Daily lower high is set, and we're looking down at 22.52 as our short-term support. If that level breaks, it's notable. XLF has closed at the low of the day pretty much 5 of the last 7 days. We would have to hold 22.52 and break 23.66 to change the daily trend, which would be notable. Best case scenario for broader market bulls would be XLF trying to bounce while the tech sector pulls back. If XLF breaks 22.52 while the tech sector is pulling back, that's going to give the S&P 500 bears some momentum. XBI, notable to hold up today very well. All-time high was hit. So high or low on the daily, 108.43. We looked a little toppy on yesterday's candlestick. Didn't break the low of yesterday, and then a rocket to higher highs. Hourly consolidation into the end of the day, still an hourly uptrend. And now plenty of space where anything above that 108.43 level maintains the daily uptrend. Impressive day for the biotech bulls. I'm sure some COVID names were the reason for that. SMH, so all-time high yesterday, pulling back today, and looking for a daily higher low compared to 145.85. Small little gap at 154.51 first thing. And we'll see what the size of the consolidation looks like as to whether or not continuation is the most likely scenario or not. The VIX with a bull move today. So bullish reversal candle yesterday, getting some follow through. Anything under 37.10 is just a daily lower high. So we will be watching our daily trends. UVXY, anything under 39.04, 39.42, just a daily lower high. So again, what would be the scenario for changing the daily trend? Looking for a daily lower high to be the most likely scenario. Hold the low, change the daily trend. And what would we likely see on SPY for that to be happening? It would be a daily high or low, fail to break the high, confirm the daily downtrend. And again, just want to clarify something I said in yesterday's video. In general, the correlation is inverse to the S&P 500, but just be aware that you have a leveraged inverse ETF, and it's designed to be inverse to what it's tracking. This is not designed to be inverse to the S&P 500, and there are plenty of examples where they break that inverse correlation. But obviously, if you have to pick a correlation, it is generally inverse. Gold. So this is the most notable bull break we've seen on gold today on this bull break that's been taking place the last 2 weeks. So daily high or low is set. Bull break over resistance, and now we're just looking at 1800. And if the bulls are able to clear 1800, there's very limited resistance from here. We're looking at 1803, and then the all-time high 1921. So it's been a slow and steady break, much slower than the other previous breaks we've seen over the last 7 months. But the bulls are maintaining control. And the more important factor for me recently, we've been seeing correlations between assets and equities since the COVID dump low. And we're talking oil, crypto, gold and silver, S&P 500, all correlated. And that is changing now. I'm still seeing a ton of correlation between SPY, crypto, oil, and not seeing it in gold. They're breaking that. Gold's green 2 days in a row. S&P 500 pulling back today. So that's a good sign for the overall metal bulls. Now the question is, can we see all-time highs? Certainly on the table for 2020 for these metals to see all-time highs would not be surprising. May need another weekly higher low to cool things off a bit. But, again, looking at RSI levels, daily RSI just under 70. We've seen it go to 80 a few times this year. Actually, I guess, yep, twice this year. Silver, not as strong as gold today. Still topping out here. So we have our high of 1845, and then we got another high of 1840. Still holding on just fine. 4-hour higher low. We got a potential 4-hour tightening range into tonight, but bulls definitely need a more convincing break of this resistance. Let's see where our XAU XAG chart stands as to who's stronger, gold or silver. And we are watching for the weekly trend change attempt. So bulls have to change this weekly trend and break 101.80 for our monthly higher low to be set. And if that takes place, then we know gold is gaining ground against silver considerably. And if we're going to see silver try and catch up to all-time highs, as silver is nowhere near all-time highs while gold is, what I'm going to have to see on this chart is a monthly lower high and lower low confirming a monthly downtrend. Because we've been in a strong uptrend for 9 years. And it hasn't been an uptrend that entire time, but for the most part. Miners had a good day today. Still a higher low everyday pattern. So it didn't break the low of yesterday. Closed up near the high of the day. And more importantly, broke 37.49. Weekly chart, rather than seeing a rejection and tightening range, we broke resistance to a higher high. GDXJ did as well. So bull miners still in complete control. And as long as the precious metals are in daily uptrends, and as long as the S&P 500 isn't collapsing, then that should continue. And there's plenty of space for a daily higher low to form on these miners next time we top out. Oil is correlating similarly to the S&P 500. We looked at the S&P 500 and we confirmed the 4-hour downtrend. So oil's holding on a little bit better, but it's a similar setup. If this support level of 39.90 breaks, then it's a 4-hour head and shoulders. And that means zoom out, and we would then look for a daily higher low compared to 37.08. That low was June 25th. SPY's low was June 29th. But very similar with what we're seeing on the 4-hour time frames, the amount of space that the bulls have to work with on the daily chart. So certainly still some correlation there between the broader markets and oil. Question overnight will be, can the bears confirm the head and shoulders and break 39.90 and 39.84 supports to start its more convincing daily consolidation, which would be a more convincing rejection from 41.63, the top of the COVID bounce. Natural gas bulls keeping control and getting follow through. 4-hour time frame, a little bit toppy, but still holding on, not even looking for a 4-hour higher low yet. Anything, I would consider anything above 1691 as a 4-hour higher low. And the 12-period exponential support is a nice visual guide that's been holding pretty much for the last 4 or 5 days. And the bulls are starting to create a good amount of space for once we do top out on this move, space for a weekly higher low. So trades I took today, they were 2 opposite trades in the same sector. So Tesla, I was looking bearish. And you look at that daily time frame and say, how could you have a really good day going bearish? And the answer is locking in profit. So I ended up today with just over a 2-week maker, maybe a 2-week and 1 or 2 day maker today. And it was because of Tesla. Tesla was my big winner. And I ended up with like 54 trades today. And that's not individual trades because I scale in and scale out all the time. So sometimes one trade will be, 3 scale ins and 3 scale outs. So 6 individual trades. But I was certainly very active today. And you look at this trade on NKLA, I tried to play this bounce and I failed to do so. So let's go with the loser first. So NKLA, I'm going to be interested in the same exact trades that I took today tomorrow. I'm going to be interested in an NKLA bounce tomorrow and a Tesla short tomorrow. Again, all depends on where we stand pre-market. But for NKLA, I liked the gap down open. I liked the RSI levels, but keeping in mind that we don't have a lot of previous price history. So RSI levels alone are not enough, and that keeps me extremely cautious. It makes me trade with smaller position sizes, and it makes me exit partial positions into any bounces to ensure that I'm remaining protective. So, first position I entered, and my game plan was 4 potential positions. I even wrote it down on my little piece of paper next to my computer screen, where I wanted to enter, what that would put my average at. Helps to stay grounded and in control when you got the plan already laid out. So enter my first position in the 44s on this initial dump. Entered a second position at what, 43.05. So at that point, my average is about 43.80, let's say. And I had other positions where if we kept dropping, and if the hourly RSI was going to be low teens and the 4-hour RSI and the 5-minute RSI, I'm comfortable filling up my 4 positions. So I would have entered another one in the 41s, and I would have entered my last one on a break of 40. So I only got 2 fills, and then the bounce started. It took a while to take shape. We just putted around on the 5-minute time frame. Then the bull break took place. So as soon as that bull break takes place, I say, okay, I'm going to look to exit half of my current position because we're just looking for an hourly lower high on this bounce, and I need to protect against an hourly bear flag as a possible scenario. It ended up being an hourly bear flag, and I set my target to sell in the low 45s. Why? Because I wanted to be able to put my stop level on the remaining position under the low of the day to that point and have it be break even. So if my average is 43.80 and the low of the day is 42.30, I want a $1.50 move to have a break even position. So 43.80 plus 150 is 45.30. I didn't wait that patiently. I exited at about 45.10, 45.09 because I just wanted to be insured, lock it in, okay. And at that point, break even. And that was more in the mid 42s because I didn't wait the whole way to get there. So bounce topped out, no follow through. And at the end of the day, I ended up exiting the second half of my position. I waited till a break of 42, and I was a little bit more, gave it a little bit more wiggle room for a number of reasons. Number one, at that point, it's a 25% position, and a 25% position on NKLA is equivalent to 20% of a, let's try that again. A full position on NKLA is equivalent to about half of a starter position on Tesla. I'm trading with way more dollar volume on Tesla because I've traded it way more often. It's way more liquid. There's way more previous price history. Actually, I take that back because we're in blue sky breakout, but it's very liquid and I'm much more comfortable trading with way larger position sizes. So very small position, exited at 42 breaking at the end of the day and ready to start tomorrow with a fresh clean slate. And tomorrow, if we gap down open, I'll look to do the same thing and scale in. And if we don't, I'll be able to potentially bottom fish off of $40. It does look like there's a bounce taking place here after hours. So maybe a bottom fish off of $40. And if there's not a setup I don't like, if there's not a setup I like, then I just won't trade it tomorrow. So anyways, small loss. That loss that I took, let's call it an 80-cent loss, ended up giving back 3% of my Tesla gains on the day. So again, Tesla's the big winner. I keep my loser really small. I play protective. The trade was not ideal. When I see an oversold bounce, which is one of my edges as a trader, my results tell me keep playing oversold bounces because you're good at it. I want to see V-shaped recoveries, and we obviously did not see that at any point today. We putted around on the 5-minute time frame, and then we broke bullish, which is why I was fairly quick to exit that half position. We want V-shaped bounces for oversold bounces. We want flushes and climaxes and big bull volume to clearly show us that's our bottom for now. And we didn't have that today. Tesla trade today. Entered bearish first thing this morning with a little bit of an anti-FOMO position. And that filled, let's call it 1393 is when my first bear fill happened. It was a bit early for sure. But I knew I had a second one lined up and I was playing off of 1437 resistance, the high of after hours yesterday. So first fill 1393, second fill, I forget, 1420s, 1423 we'll call it. So at that point, my break even is maybe 1408, 1410, something along those lines. So we got a beautiful rejection. You know, in hindsight, if I was a bit more patient and didn't establish that anti-FOMO position, I would have had a really great entry because it was a clear rejection by $7 from the high of after hours yesterday. And then we dumped to a new low of the day. And that dump gave us a lot of confidence. So I exited half of my position into the pullback to cut my risk very low. And I then held on to a position. And I re-entered more on a bounce, knowing that we were just looking for a 2-minute lower high on this bounce. So exited half of my position into profit, maybe around, probably around right around break even. Got the flush follow through to the new low of the day, made me more comfortable, re-entered bearish over 1400 to re-enter that second half of position. And then when we saw the new low of the day, even more comfortable. And I exited on 5-minute oversold conditions. Why? Because that's one of our back burner trades where after a massive bull run, we look for first 5-minute oversold conditions for a solid bounce. And we look for the first hourly oversold conditions for a solid bounce. So exited in the 1340s in 5-minute oversold conditions. We just kissed it and then straight into a bounce. And I even went bullish. So I exited and then went bullish. And I think my bull fill, I probably exited, I forget exactly, but 1340s. My bull fill was 1340 on the dot. And there was a tiny double bottom that took place at 1336. So I was sitting there staring and saying, okay, do I want to make my bull entry right now? And I saw 1336 and we hit it. And then we saw this bounce attempt and we got back up to 1351. And then we came back down and I was sitting there staring with my finger on the buy trigger. And as soon as we held 1336, we held the low of the day by 39 cents. So we held it and then we started heading up again, market buy, filled at 1340s, and then a really nice position. Exited half my position, right around maybe 1350 or so. Again, being protected because at that point, if I put my stop under the low, I'm risk-free. And I exited the second half of that position at 1370. Left a little bit on the table as far as the bounce. And then I shorted. I shorted this 5-minute lower high. Wasn't very comfortable on that short, but small win. It was pretty much a week maker on the drop, a 3-day maker on the bounce, a half-a-day maker on this pullback, and then I had some more trades throughout the day. But I did short it again up here. So I shorted. So as soon as we changed the 5-minute trend, I then know to zoom out. So, okay, 5-minute trend has changed. What's the most likely scenario from here? We got the high of the day, the low of the day. If we're going to V-shape recovery to a new high of the day, the bulls need to go 7% plus. That is not the most likely scenario. In my opinion, the most likely scenario is a lower high. So I scaled in again. My first bear entry was 1404. My second bear entry was when 1420 broke. So I probably got filled right near this top, and my stop was above the high of the day. We got a solid pullback, and that was another decent win of a trade. The whole time, I'm watching SPY and QQQ, and we were seeing no notable weakness on SPY and QQQ, and that was keeping me cautious as a bear. I would have loved to have held a bear position overnight, looking for daily consolidation, but the weakness did not come in the S&P 500 and QQQ until 2 p.m. to 4 p.m., and at that point, I could already tell that Tesla wasn't going to be, a dump day. So heading into tomorrow, what I want to see is an ability to play off this resistance. I'd love to see an open at 1400, and I'd love to go short and put my stop over 1437 again, and then hope for some more bear follow through. We are still in an hourly uptrend at this point. Higher low at the low of the day, higher low at the end of the day, and it all depends on what the S&P 500 does overnight tonight as far as where we're going to open tomorrow. But again, bigger picture, what's the most likely scenario on this daily time frame? We're looking for a daily pullback, and that daily pullback could be an easy 10%. So I would like to have a position for that, but just didn't see a scenario that I like today for more than just day trading. So same mindset tomorrow that I have today on both these tickers, but it all depends on what happens when I wake up at 6 a.m. and start doing my hour and a half of homework before the bell rings, establishing my trade game plan and getting the complete picture of where the market stands, because it's going to be very different 13 hours from now compared to where it is right now. Shut up. So hope you had a good day. Thanks for tuning in. Do good things, and we'll see you tomorrow. This is a pokeberry bush that I just let go. Technically it was a weed here, but the birds eat the fruit, and there's some medicinal properties to the roots and stuff. The fruit itself you can't really eat, but it's a cool dye. It's very bright, and you can put it on your skin to make it bright pink. I'll have to do that at some point. Today's the big day leaving the nest. So far just 2 remaining. Nope. Excited to get to use the hot tub again. I haven't been able to use it for a month. The blackberries go red first, and then they turn into a deep dark purple. Probably get the first one of those over the next week. Muscadine grapes are sizing up. There's a bunch of wild grapes around the property, but you can definitely tell the difference between a cultivated variety versus wild in terms of how many seeds there are and how big the seeds are and the sweetness of the fruit. These lotus flowers open in the morning and close at night. There's a few more on the other side. Some of the butterfly bushes that I planted around the pond last year starting to flower.